right? We're not quite going to get started here yet. Just want to make sure everything tech-wise is working. Looks like it is. If someone can confirm they can hear me, that would be helpful. We're going to erase all the lines here so I can't cheat. And pull up a... also, does anyone have any preference for whether or not you want to do this with today's information? Do you want to go back 2 days earlier? I'm going to simplify this chart a little bit. Would you rather do NQ or ES? First one to suggest it or request it, I'll honor it. So let me know. Otherwise, I'll choose. I don't care. Cool. Glad to hear you guys can hear me. Okay, so I'm just going to change these a little bit, make it a little bit easier to look at. We're going to go dark mode here. Cool. And then I need to make this bigger because we're going to talk about the waves today. All those help. And then, yeah, we'll leave all that information on the 30. Okay. Hey, Rick. Yeah, does anyone have any preference for what day we review? I'm going to look at candlesticks as well as the algo and talk about quite a few things here. So if there's like a day that I was going to use today, and I was going to use NQ, but if someone would prefer a different day or a different product, this works on any futures product as long as we have the voodoo range. You can technically do it without whatever levels you want, but I find the voodoo range helpful. I thought today was a pretty good example because we went both directions, so you will have opportunities to see both sides. So NQ for today is what I'm going with, unless someone else has a specific request for someone else. So let's just see here. Pull up my candle chart, make sure that we got everything ready. Here, I'll give you guys current information since we just opened. It's not going to be very interesting enough because it's Asia. Boring. So yeah, let me get this ready and then we'll get started. And like I said, if no one has any preference, I will do it with today's stuff with NQ, which is super cool. Alright, so we're going to turn off some of this info here. We don't need to look at this, or this, or this. Okay. That should clean it up. And then we can go to 30 minutes. We're going to extend this. Okay, cool. Let's see. So we're going to start here. And only 3 people. Wow, I'm surprised. Okay, well, you guys get a special treat. Like I said, I usually do this in private coaching, but kind of had a bit of an epiphany today with Simon trying to figure out how to time my entries. This came up because I'm in the process of doing the Apex Trading prop account evaluation, and for that evaluation you need to trade very small to begin with while you build a cushion. There's not a max loss per day, but in the account you can only lose $675 of their money. Otherwise you have to reset it. So the strategy is, the best strategy we know of is to start really small, build a cushion, and then increase your size. And since there's no max loss per day, that size can get pretty big. For a micro account, I mean. Max is 20 micros per account. You can stack multiple accounts. But anyway, I was struggling with trying to figure out, like, do I take every setup that I see as a scalp? And then which one should I hold a runner? And, you know, Simon and I have been chatting about this for a bit, and today he introduced, or actually, it's not a brand new idea, but it's a clarification on using the waves, these guys down here in the algo, to help determine which side we should be looking at, and then suggested that I focus on trades that have clear unfair pricing, right? So there's a lot of ways to find unfair pricing. The most common way would be to look at the profile. So here's an example of the profile. Now this is over a couple days, a week, I believe. But regardless, it doesn't really matter which profile you use, right? But I'm just going to show you an example of fair versus unfair pricing. So here on the right, we have the volume profile, and on the left, we have the delta profile. So what I would be looking for if this was my daily chart, again, I believe this one is like is it longer than a week? It might be a couple weeks. It doesn't matter. The concepts are all the same. What I'd be looking for here is areas in the profile that have very little activity, right? Low volume areas, and high volume edges. Hard to point to this. I guess I have to turn this off. Okay, so a little easier it might look better to use the arrow here. So we've got here, right, obvious edge, here, an obvious edge, here, an obvious edge. And so if this was the chart I was trading on, and this was like the daily profile, I'd also identified that most of the value is up on top, and that this outside the value area was considered a tail. Down here would also be a area of unfair pricing. And so if we dipped into this on the very first time, I would expect some kind of response here. And the idea is that your trades that occur in unfair pricing have more of an opportunity to go somewhere rather than just be a scalp, right? Rather than just support resistance. If you want to look for the one that's going to break, like, okay, here, I can show you right here, actually. So let's say you know you're bullish. You don't even need the profile to see this. And what I'm going to show you is you can actually use voodoo range levels instead. Which is, like I said, was my own identification this morning. Just kind of an epiphany that, like, hold on a second, I can do this with my own levels. So let's look at this, and let's say you know you're bullish, right? And you're trading, like, I think this is Monday night. What I would notice right away is I'd say, okay, well, we're obviously in a consolidation phase, and it's bullish. So anything I execute in here is going to be a scalp. And if I'm using really small size, like 2 micros, like in that Apex evaluation, 2 or 3 micros is really all you want to risk, because if you take a couple losses, you got to restart the account, right? So I might not even want to take the trades that set up inside of here, because it's all fair pricing. It's well negotiated. Whereas if I got a wick down here, like this one, and I knew we were bullish, and I got a setup there, well, that I can take even if I'm only trading 2 micros, and I don't have to worry about commissions, because I'm not just going to go for my normal 10 points. I'm going to try to stretch that trade a little bit. Well, the same thing happens here, right? We talked about this yesterday in yesterday's market review, that when you're bullish, we know that retesting the voodoo range is a good spot to look for longs. Well, the one reason for that is because it's clearly unfair, right? Not very many people have had the opportunity to do business there, and when they do, there's lots of interest from one side. Again, this is when you know the bias. That's the key here, is that you can't just do this all the time. But if you know that you're bullish, and you know the areas of your interest, like on a test or retest of the voodoo range level, or perhaps today, bring in more pertinent information. If I go in here, and let's say you were in the overnight, right? I should be able to do this with a 30-minute, but it might be easier with a smaller one. So let's say you were in the overnight and you were trading London, which is here on the right, okay? And so another purple pivot developed overnight, and so these are reducing volume and price zones that I know tend to get a lot of reactions. So generally, I think we can all agree that this looked like consolidation, right? The range was constricted compared to the previous session. So generally, what you would expect is see the voodoo range levels are here. I'm just going to take these off because it's just too much to look at. So let's take all that off. And we'll just look at voodoo range levels and the purple pivots. And then we've also got volume area, high and low, and the previous point of control, which is going to come in handy in a minute. So first of all, we know that anything around the previous point of control, that is not a great place to expect to enter and get a big extension in general, unless you're approaching it from a gap and you're like dropping into it. And usually that's from days ago. But if you're in this range of the previous day, like we said yesterday, this is not a good place to enter trades. That purple line right here. Sorry, it's purple and just like everything else, but it's the purple line right here at 12.669, 50 or no, sorry, 12.668. That is not going to be the place to look for really, really big trades. And then you can look right around it because all the volume is there. Even without the profile, right? I can tell that this is clearly a high volume node. If you need the profile, you can turn it on. I'll just do it here. It looks a little bit better in Sierra chart, but let's just look at it here for ease of, so everyone doesn't have to wait for me to set it up. So we just go volume profile, and we are looking for session volume. Oh man, I gotta take something off. Hold on. I've got all these other indicators in here on the uppers and lowers that I've got hidden at the moment because it's so busy. All right, volume, session volume. Actually, we could even do fixed volume range, but let's just do it like this for a second here. Oh, I guess this is going to be the overnight session. That's kind of annoying, but one way or another, we can see that there's lots of volume here, right? One way or another, everyone can agree with that. So you don't want to be participating inside of here if what you're looking for is a big stretch in a trade. That's just not where you're going to catch those. Where you're going to catch the big moves is on the edges. Up here, for instance, maybe at this voodoo range level here, 12.768. Maybe up here where this purple pivot and this voodoo range level connect, although it's pretty far away, 12.846. Or the earliest to the downside would be down here at 12.602 to 12.612, right? This area here makes sense to get some reactions too. If you were looking in this area, what you would generally expect would be to test it and bounce back about 78 points or one voodoo range of a stretch. And that's, for me, a pretty good trade. Every once in a while, you're going to get up to the next resistance, right? And if you're going the other direction, if you're getting short up here, you're generally targeting this high volume area in the middle, the POC from previous day, right? And if that happens to go, well, the previous day's POC is down here, the day before that, and then you can see that you've got a high volume area inside of this purple pivot. And then there's also a voodoo range level, 12.534, right? So all of those areas are good targets for that big stretch. But I think the part that I was missing is I was so focused on the setups with the algo here that and I knew my levels, I knew where my targets were, but I wasn't thinking about the fact that the stops that I'm taking from taking, which are normal, right? It's normal to have stops in any system. Will have stops. You will do everything right, and they will still stop out, and that's why you need to have a stop determined before you get into the trade. But if we can all agree that most systems are going to stop about the same regardless of where you get in, I think that's usually a good assumption. Obviously, if you're in, it's going to change day to day, right? But from if you just look over everything, the area that you're getting in isn't necessarily going to decrease your stops overall, but from an individual day to the next, where you get in has a huge thing to huge influence on whether or not the trade is likely to pan out. And the reason for that is because you have to look at where support and where resistance is, right? And this should be pretty obvious, even if you don't use the same system, that everyone knows that like where you get in is going to influence whether or not you might get stopped. Everyone would agree with that, even if it sets up just right. But that's only because of the previous price action. It's where you are relative to the previous session or relative to the week's range, right? But when it comes to, if you just looked at any random number in here and you compared a setup that set up exactly the same here and exactly the same here, I'd be willing to say if you looked at that over 100 days trading in this general range, that they're going to actually about equal each other out. If you had 10 stops here over the last 30 days, you probably got about 10 stops in this zone too. And so that realization made me just suddenly recognize that it doesn't actually matter where I'm getting in, like globally. What matters is where am I getting in relative to the previous day, because I will have plenty of opportunities to take a trade in all of these areas, right? So if we call this, like, let's take the profile away for a minute and let's just break this up like this. Pretty sure you guys are following me. But what I'm saying is that like I'm gonna have lots of opportunities. Let's say I just knew that I wanted to be long down here, right? I'm gonna have opportunities to get there at least a couple times, right? Maybe not every session, but most likely in the next couple sessions, we're gonna trade into this range. Sometimes those trades are gonna work and sometimes they're not. And that's just the way it goes. But when it comes to trying to figure out how often they're going to stop versus how often they're going to pan out to be a relatively strong trade and not just like a 10-point little scalp, is going to be completely dependent on what happened there previously, right? So we need to keep track. We need to have a way to keep track of which areas we want to be attacking every single day, because it's going to change. So when you start trading, it doesn't matter how you do this, whether I use a profile or you use the voodoo range levels or you use the previous days high and low. It doesn't matter, honestly. Just have a system, right? So that every day you can objectively do the same thing, and that way you can determine whether or not these zones or areas are working. So let's say, to simplify things, that if I was getting in to trade here overnight, oh sorry, you can't see the time. So like let's say midnight, right? June 1st midnight. And I'm looking at the chart trying to decide where do I want to trade. I have to get it out of my mind that this is the only opportunity I'm going to have to short from here. So if I get up there, I must short it, which is where my brain tends to go. It goes to a very absolute point. It looks at, the trend like this, and it's like, oh man, I really missed this short. I wish I would have gotten it. Well, then I missed this one too. So if I can get back up there, the moment I get back up there, I need to short it, because it might just go all the way to the lows and I'll never see it again, right? Like kind of like this one did. It got up there and then it just never returned. Doesn't mean it never will, but that's what my brain goes to immediately, is the very obvious edges of the previous session or the previous week or whatever. I'm looking at those like killer trades that I missed, or maybe killer trades that I took, and I'm thinking, yeah, man, I want short from 12,768 all day long. I'm just gonna keep shorting it because I'm bearish and I just want to short. So if that's fine, but the problem is if you don't get there, yeah, you don't really have any trades in here. But what if you come up? Okay, like what if you come up and you get there, right? And you just short it because you knew you wanted to be short here, and you just get absolutely annihilated and your stop gets hit, and then you're like, well, I guess I was wrong. And then on the fly, you're like, okay, well now my next area of interest is up here, right? So I can't short unless I get to 12,846 because I was so focused on this area. All I wanted to do was be bearish. And when it got there, it just either blew me up or didn't set up. So then usually I'd be backing up and I'd say, okay, next area of interest is right there. And then the other part of me would say, wow, this looks really bullish. Right? And so even though I might have come in thinking I wanted to short here because I thought it was bearish, and I'll think, oh wow, this actually is a nice higher low. So what I really should be doing is buying this, right? And because it's so far away that it just looks like a good price, right? Is really what I'm getting to here. Well, then when it doesn't reach 12,846 and it comes down to 12,690, the natural thing to do is like, oh, okay, I'll just have to buy that, right? And you can't do it, even though you want to. It doesn't set up, and if you took it, it's just gonna rip you up, right? Because it's not a good place to be long at the moment. And it might look like a good place to be long on like the 5-minute chart when you're up here. You might think that you want to be long down here, but the truth is that like it's just not gonna set up often enough. Sorry, I'm way back here. If you are up here, right, and you see the breakdown and you're like, damn, I missed the short. Well, at least it's been bullish, right? You don't know what's gonna happen. At least it's been bullish. So maybe if I can get a bounce, over some of these previous resistances, maybe this will become support now. And then you see this and you're like, yes, right? And I'm not saying anyone in particular in this stream. I'm saying like me, right? Like that's where my mind goes. Is I missed a trade, so I should probably fight this current move and take advantage of the fact that we're now so low. We're under the open now. It's a great opportunity. And in my experience, that way of thinking, of going from one candle to the next, and then looking far away and seeing like where you should have been involved, and trying to use that to influence your bias, it just doesn't work. Like too often you're just gonna get this, and like I mean I could honestly do this all day long. I could be like, okay, well we're clearly short now, but I missed the good short, which is up here. So if only I could get back to here at point of control, I'll short it again, right? And then it just goes lower, and you could just do this all day long and miss tons of trades. And then what I end up doing is I'm like, wow, I missed this big short, and I took a long and I got crushed. And then I waited and I missed this short, and then I saw it come back up, and at the time I thought, well, I had a level here, so maybe it's bullish. And so when it came up here, it broke through this what used to be overnight a really important area. So I looked for longs and missed the short, right? Like story of every trader's life who's tried to do it this way without a clear process for should I be long or should I be short, and should I be looking for big trades, or is there just no opportunity in this area and therefore I shouldn't be looking for big trades? And like I said, this doesn't matter if you're using voodoo range levels or previous days open and close or overnight high and low. Like any time, anything that's based on the levels. And as you can see, this occurs for the purple pivots, for the yellow voodoo range lines, for the value area high and low of previous day, it doesn't matter what level, but how you treat those levels and whether or not you see them as absolute, like bullish or bearish, like bullish above, bearish below. If you see it that way versus looking at it like, where are we compared to previous price action, and where could we get if this current move continues. So it's been a change in perspective for me, and primarily because I've gotten away from, I'm not stopping at the candlestick chart, right? I might look at the profile, look at my levels, determine a general bias for the session, but I'm not stopping there, right? I'm then going deeper into it with the algo and saying, okay, now that I know what areas I'm looking for, let's see if we can get it to actually set up there. And what we figured out today, or what I should say, what I figured out today, what Simon shared today, was that even if you come into a session with a bias, there are some very, very key ways to determine whether or not that bias should stay the same, or if it should change. And so that's what I wanted to share with everybody. This is stuck down there. How do I get to that? Let's see. Okay. Hold on here. I just got to make this smaller. Give me 1 second. It got really big. Okay, there we go. So what we're going to do is we're going to back up a little bit here. Hey, Gary, thanks for joining us. We're going to back up a little bit here to Tuesday. Let's do Tuesday evening, right? Tuesday evening into Wednesday. And I'm going to show you what we discovered. So again, I'm going to go back and forth between the two. But remember, we just looked at this, right? We looked at Tuesday evening here. And I was starting to rant about all this level stuff. So let's do something interesting. Let's take a look and say, okay, let's imagine like we did before, that we are looking at this profile and our current position before this move today, and rather than having a perspective of I want to be short at the highs and buy at the lows like everybody else does, let's look at it and say where is price unfair currently, and let's see if we can get anything to occur down there that is a sign that we might have the opportunity to sweep across the entire range, rather than attack every level, or wait until it gets at the very, very, very edges, which might just end up causing you to overtrade because you missed it, right? That's the struggle I have. It's either trade every single level everywhere because I don't want to miss a thing, or I don't want to trade any of this. I just want to wait for this spot exactly. And like I said, then it gets there and it fails. And so I just assume that I must be wrong and then miss the trade. Right? That's the crux of what I was dealing with. And this is how we fixed it. So again, last night, let's start at these times are different. This is Eastern time and this is Central time. So it's a little bit confusing, but let's just start at where it starts to get interesting. So we'll say like here that would be 2 o'clock. Right here. Okay. So we're going to take a look at the 24 tick. Usually I'd be trading off the 20 or the 16 overnight, but it's just a lot of information to process if we do it that way. So I don't want to overwhelm people with things to look at. So let's just, it'll set up anywhere, just maybe not as often. So let's look at 2 o'clock, which is, like I said, 3 o'clock Eastern. Okay. So on the candlestick chart, what we see is this. I should be able to back this up. Yeah. And we could immediately see that we're inside of a well-negotiated area. We can use the voodoo range levels to kind of identify where that might start and end. And then we can look right behind it, right beyond those voodoo range levels, and see if we went through that is there other resistance or support areas that we want to continue to attack or observe? Or is there more high volume areas where it's just going to absorb basically or exhaust? And so, because these act as magnets, right? So once you get in here, like, I guess absorb isn't quite the right word, but like you're gonna, if you get in here, you're gonna see all sorts of activity, and that activity will include stop sweeps. So getting in here with the intention of getting out here is a really hard trade. What's so much easier is outside in, because you go over this area so often, you negotiate it so well because it has so much volume there before. So right away what we can do is we can add these levels to the chart. So we'll do 12, 6, 12. And and like I said, I'm looking at the voodoo range level. Whoa. Looking at the voodoo range level here, which I've shared with everybody. And I'm identifying this level here, right? I'm identifying that it had a reaction recently, but during that time it was not clearly bullish, right? So we're not like super confident that this is going to be an immediate bounce because this area was negotiated before, but we can look at the volume and we can see that we tapered here into a low volume node, right? And that low volume node was near a previous day's point of control, which is this purple line. So what I could basically infer is that anything, this is like a collective point of control, I believe, or maybe a, you know what, that's volume area low of today because it's already open today. So don't pay, this pink line was not there at the time, so ignore that. It's shown up there now because we've opened a new session. So if I focus on, here, let me change this color. If I focus on this area, right, in general, again, I'm taking that from either the profile or else a previous day point of control and a voodoo range level. And then I also look up here. Those happen to match up kind of nicely, but the idea is it's another voodoo range level, 12,690, and it could go all the way up. And what I'm looking at particularly is this low volume node here. So this is the high volume edge, right? But notice that this profile, like the market profile, if you imagine what this market profile looks like, it's really well negotiated up here, right? So if we push higher than that, we have to start looking for exhaustion above it. Because look, you know, you see this? Like, clearly, 12,768 is the better entry for the short. I think everyone would agree with that. But the fact that there is a voodoo range level right here is important. Now, the other thing we can look at, and again, this might be easy to see on Sierra, but we can take a look at the profile itself and see if it's symmetrical. Because eventually most profiles do become a normal distribution, right? So if we do this, if that's our angle here, now you can I believe, oh, can I not do that with this? I can't mirror it. I thought I could. Guess I can't mirror it. Okay. So basically, if I just imagine mirroring it though, it's probably like here, right? Hopefully you see that. So what I'm saying is if I want to make this a normal distribution, it would look like this. And so my first guess, if I know nothing else about what happened previously, before this profile here, let me make it like this so it's a little easier to see. My first guess is I've got lots of, the market agrees quite a bit that this area in the middle is fair pricing. A lot of the market also agrees that this area is pretty fair, right? Where there's not a lot of agreement is way up here and way down here, right? So if we want to look at the big picture, what we really need, and rather than just the tiny little picture, what we really need to be looking for is breaking this voodoo range level, 12,535, or this voodoo range level, right? So we're going to make this area red, because if it gets in there, the opportunities to sweep all the way through get much higher. That's actually still not that easy to, let me see here. Let's make it, okay, we'll make it green. Because I see what's wrong. There's no, it's shaded, so, oh, okay. So we need a little more opaque. There we go. We'll make it green. Because that's where we want to get involved, right? Like, definitely. And again, I'm just looking at the profile to get this, and then I'm cheating with the voodoo range levels. I know my eyes should immediately go to the purple pivots that match a voodoo range level. See that? I've already demonstrated that before. Talked about it on Twitter for months. The purple pivots and the voodoo range levels work together, right? The ones that are on edges of them, the purple pivots that have voodoo ranges on the edges, those purple pivots are going to be stronger as long as you're not trending through them. Don't fight momentum, but if you have any form of balance or a sign of exhaustion or something like that, the most likely place for that to happen is going to be inside of or on the edge of a purple pivot, especially if it's near a voodoo range level. If you want to take it a step further than that and do your own research, what I would recommend you do is look at the profile. You can also look at the delta profile. If you look at the delta profile here, there's a huge hint here. Hopefully people can see this. Again, these voodoo range levels are printed earlier than this day was printed, right? But look where how we distinguish between where the buyers were active and where the sellers were aggressive. It's like literally right on the line. So that should right away give us a huge hint that this area down here, it probably doesn't even have to be this big, right? Like we could honestly probably make this like tiny. It probably only has to be that big. Because look at this, like there's, I mean, okay, I guess we should go to the low volume node, but still, it's it doesn't have to be that big. This area should be, and I think we're there right now. It's like this area should be very responsive. And if we look up here, we have a very similar phenomenon. See that? Red on top, green on the bottom. What's in the middle? A voodoo range level. So we can take a look at this little low, it's not really a volume node, it's a low delta. There's very little difference between buyers and sellers being aggressive there, okay? So before we even start the trading day, again, I'm just looking at like London Open when I actually took a peek at this and didn't perform this because we didn't really talk about it. I didn't identify this until this morning. Like I said, it's funny how you can look at tools for months and months and months and not see things, and then suddenly they become very obvious. So what I've now produced is I know that up here I have a like short-term sell area resistance, but that the real sell, if I want to take it all the way across the range, the big ones that I want to either get max size with or potentially take it in that evaluation account where I can't handle a lot of heat because I can only lose $675 of their money. So those first couple days you trade it, if not weeks, depending on how much you trade, you got to be really conservative and get some really nice stretches. Otherwise, you're just not going to have any money to play with. So what I really want for that account is those green areas, like where we are now, right? I don't just automatically buy or sell there, right? I have to then take the algo and find the next step to this, which we're going to do in a minute. But I know this is taking a while, but hopefully this helps you guys see, because everyone has access to the profile, hopefully, and certainly you have access. Well, you have access to this profile if you have the daily voodoo range indicator, and if you don't, let me know. I'll help you find it. But if you've got the daily voodoo indicator and you calibrate it with the levels for each week, you can have all this information, right? You might have to find your own purple pivots, or else just look at my picture and you can add them. But even if you didn't have those, when it comes to these green areas and even the orange area, you don't even need them, right? Like it's just looking at where price is still to be negotiated, and when we reach those areas, you tend to get a response. So let's then. Oh, and then the other thing we should recognize right away, if we know that this voodoo range level at 12,534 and this voodoo range level at 12,768 are important, right? Think about what that means about these two. What does that mean about these two? So now, and why they're important, right? Because they're on edge of a profile or a delta low volume node, or at the edge of a purple pivot in this case too. Like the location is ideal, right, for our current market, like price action. These ones, this and this, were super important yesterday. The day, the night before, they were real important. Well, they've been negotiated, right? We've gotten above and below them, and they've swept the whole area already. So these ones are not going to produce more than maybe 2 voodoo range. Not really, that's still 150 points. But that would be the very maximum I would expect, is to get in here and reach this one, right? Or to get in here and maybe reach this one. But once it gets to these outside areas, we need to expect a response. So what we don't want to do is miss a short here, see it take it over, and think, wow, we got above a voodoo range level. We must be bullish, because you're running right into serious resistance, which we need to prioritize. Whereas this orange one, like I said, if you think you're... I mentioned I thought this was a little bit bearish because the profile itself is not... It's asymmetrical. And the first place to look for resistance would be up in here. This overnight resistance here, especially after seeing this rejection at the voodoo range level. I want to see that very next test of 12,690 and watch it carefully on the algo. That would be a possible short-term entry, but it's not going to do anything more than 1 or 2 voodoo range levels. That's the important point to make here. Okay, so let's put these levels on the 24 tick quickly. And I'm just going to pull it up next to it because it's easier than going back and forth. So hold on, guys. Let me just pull this on a different screen. Just in the interest of time, everyone's had plenty of time to look at that. So let's do one at a time and knock these levels out. We've got 12, 6, 12. Right? 12, 6, 12. And we've got, and we're going to make that one orange. We're going to make that one orange and, whoopsies, sorry about that. Orange and dashed. Okay, and then we're going to say okay, and then we're going to copy and move it. And we'll put the next one at 12,690. So these are the voodoo range levels that I said are important, but not as important as the ones further away, because they've been well negotiated in recent history. 12,768, on the other hand, let me fix that. Easier just to do it in here. Put the anchor at 68 even, and we're going to make it dashed and green. Okay, so that one, along with 12,534, copy and move, just drop it anywhere. 12,534. So these two are much stronger at the moment. Again, this is none of this is absolute, right? These are much stronger at the moment. Okay, so now, oh, sorry for the sound effects, you guys. But thank you for following me. Whoever just did. So yeah, so we're looking at the algo, right? For those of you who have never seen the algo, I know it's a lot to look at. But here's the cool thing, is once you've identified your areas of interest, I now don't really care what it's doing inside of here. All this area here is like, it's not even interesting to me, because we haven't, except for maybe the one exception to that might be here, right? We got a sign of aggression, the red triangle, after visiting above this voodoo range level and failing to put any aggression above it. So as soon as they got up there, they failed, right? So that one might be reasonable for a scalp, but like, I'm not even worrying about this anymore. I'm not even going to gonna mess with it with that Apex account. Like I can still take it in my regular account because I don't have to trade with 2 micros. And so, you know, a 10, 15 point scalp is still worthwhile even after commissions. But with 2 micros, it's just you need a lot of those to really make things work. What you don't need a lot of is these really big 70, 80, 90 point moves. All you need is like 3 of those and your day's done. So, yeah, so let's right away see how having these lines identified early and then just knowing that anything inside of here, like normally, for instance, I could convince myself that this orange bar with a star that comes after a triangle up, arrow up on a pink bar, I would normally say if this is at good location, this is usually a profitable short. Now, what's interesting is it does work for a scalp, right? It does produce a rotation, but was it really worth, getting in? I'd have to get in here, right, at like 41.50 and like hopefully get out at like 31.50, right? Maybe 12 points, and my stop goes up here. So it's like it doesn't mean it doesn't get 1-to-1. It's still worth trading. It's just not trading if you can. It's not worth trading if all you're looking for is the big moves. So it doesn't mean that this isn't useful. It just means if you want to be aggressive, you could go ahead and take it. But if you have reason to be conservative, there's plenty of reasons to be. But like I said, my newest reason is because I just can't take that many failed trades with that account. Then I'll just skip it, right? And in the same sense, I could skip this one too. Even though it produces a nice little push, it's not setting up where I want it to be. Now, the frustrating thing is that I will miss some of these, right? Where as long as you can hold it, it's a pretty decent scalp. That's 80, it's 60 points, right? So nothing's foolproof. If you're going to filter out trades, you're going to miss some good ones. So I'm not just going to not take these anymore. I still think they're good, but I need another way to identify which ones to take. And so I brought this problem to Simon, and Simon asked me, well, are you using the waves? And I was like, oh yeah, the waves. If anyone has been keeping up with the coaching sessions that we've been doing together, I've given Simon the privilege to embarrass me and put my coaching sessions with him on YouTube. You can find them if you want. You can find him on my Twitter too. But he taught me last month, I think it was. Last time we had a formal coaching session, how to use these waves. And even though I do understand how they work, I have not been paying attention to them as well as I should have. So I'm going to show you real quick. Now, keep in mind, this information is really only going to be helpful if you have access to the TradeNPerform algo, right? Because if you don't have that, then you don't have the waves. So, but I will tell you that all this is accumulated volume. So even if you don't have access to the TradeNPerform algo, well, it won't be as obvious. You won't get a big old glaring, I'll show you how obvious it is with this, but if you don't have this tool, as long as you have a way to measure volume, especially if you have a way to measure accumulated volume, there are some indicators, let's just say that, you could potentially produce something similar. Is it going to be exactly the same? Absolutely not. There's more to it than just that. But the concept, the reason it works, is because it's tracking accumulated volume. So I'm going to share it. Like I said, just as normally this would be something I don't share with the public, but I was thrilled to see how well this helps, how much this helped me filter trades more appropriately, and just felt like I had to share it with people, because if nothing else, if you think this is pretty cool, you can certainly join us and then learn how to use it just like this. But even if you're not really interested in joining a paid room, which I totally understand, I avoided a paid room for like 6 years. Probably cost me a lot of money not to be in one, but the fact that I really didn't want to pay for the education, whereas I probably should have, or at least not stick around. I tried a few of them, but never really stuck around with them. So I get it, and I want to make sure that even if that's the stage you're in, where you're like, I'm not really serious enough to like pay for education. I just kind of want to learn this on my own. Believe me, I was there, and this will hopefully still help you. So what we're looking at is, whoops, I thought I grabbed the right tool. These waves here, which are based on the Wyckoff method and are very similar to Weiss waves, if anyone knows how those work. So what we're looking for is 2 or 3 basic principles with the waves. Okay, what we're going to look for first is we're going to look at divergence, right? So an example of divergence is like this. So we get a higher high in price, but a lower high in accumulated volume. What does that tell us? It tells us, that this, what we'll call a wave for now, this wave here, has much less volume than this wave. And so at first it's like, well, yeah, duh, like it's a lot smaller, right? But if you think about how markets work, you need continuing interest to produce follow through, right? So the one exception to that is at support and resistance. It's not an exception. It's just where you normally see it. It's more normal to have decreasing volume at support resistance. But, and in this case, this is your resistance here. And you are at support and resistance. So it's still helpful to know that you're divergent, but this is why, this is why we're divergent here. The reason they can't get as much volume, right? So let's think about how this worked, right? They came down, they pushed with really big volume here. The bears made a divergent low. And because remember, the bears are moving on their way down, right? So they got a lower low, which is what they were trying to get. But they couldn't get as many contracts. I'm looking at this gray wave. The bars connect to make a wave. And this gray wave, right? Ignore the green one. So from this point to this point, the volume is decreasing. But the bears are making lower lows. And sellers want lower lows. So when they get that, what ends up happening is now the buyers don't have to work as hard to break this swing. And so you can see it's got a little purple sideways triangle on it. These are called power bars. Mine look a little different than Simon's. But what you're going to see is that this power bar becomes much easier to break than, say, this one. Because it's got this one as well. I didn't see it here, but this one has a lot of volume accumulated there. And if you think about what happens when people buy, like in this case, when they sell, if they sold with a lot of volume, if they were a big player, they're gonna defend. See this? These guys got a lot of volume in here. You can even see where with just this, or just use your volume indicator. But take a look at this. If I draw a 45-degree angle, we can see that this guy was the very first to really push the volume. And that's him. Right? So this guy is the one that's expected to defend. Where I was getting confused is when I saw this, I understood that this was a divergent wave, right? And I understood that buyers now have an easier time to push. What I didn't get was that this volume here, this guy pushing really hard, and the fact that it was a divergent wave. It's got the dot there. I'm sorry, divergent bar as well. It's got the dot there, meaning that there are also buyers, significant amount of aggressive buyers in this bar. Where are those buyers? Well, they're probably near the point of control of the last few bars, and they're also probably near the most recent absorption here. Okay, that's probably where buyers got trapped. You can see you've got two more divergent dots right above them. So there's also buyers at least up to the point of control of the previous bar, which is here. So there's buy. Oh, this one also has buyers, right? So all those yellow dots tell me we've got trapped buyers in here. And those trapped buyers had very low volume initially. They started pressing volume here and continued. Where did they press volume next? Well, let me do this one. Hopefully start to see a pattern here. Oh, right there. Well, that's interesting. That one has a yellow dot too. So there's aggressive buyers in there. Where are those buyers? Probably in there, between this point of control and this point of control. Yeah, sure, there's some in the wick too, right? Why are they there? Probably because of this. So some of them are up here who bought as soon as we went over this that price right there. Right, so some of them got in right there. Oh, maybe not quite. Okay, well, as they approach them, let's just say that. That's usually how it lines up. It just doesn't quite make it. So it's not a surprise that when we return, and there's more here, right? It's not a surprise that when we return here, what happens? We get into this resistance zone put on by these trap buyers, and they trap more buyers. We get another dot. It's not time to be bullish yet. Whereas in my mind, I was getting a little bit confused about when I should be bullish. Because in my mind, what I was seeing was we have a big buy wave. That big green wave looks pretty large. It's bigger than the previous ones. So shouldn't I be taking buy signals? The truth is, you need to wait. This is basic. Volume is kind of a leading indicator. It's not quite the same as something like Rsi Divergence, for instance. It's quite a bit different. It's a leading indicator. So when you get this kind of divergence here, what we're seeing then, what that means, all this put together, quick, is we had trap buyers coming all the way down. They tried to save them, and the trapped buyers became sellers, creating a new resistance. Near old support, but let's just call it a resistance for now. If we were really bearish, if the market was going to the lows right away, what happens next? What happens next is this low gets taken out, and we put in an aggressive move below it, like a star or a triangle. I can give you an example if you want, but it should be pretty obvious that what we would expect when we have more trapped buyers is lower prices. They become sellers. Anybody who bought at this wave becomes a seller, and that little up wave had a lot of volume in it, right? So, and most of that volume, again, you can just draw this line like this, just a straight line. And most of the volume came in, of course, on the sign of aggression. So buyers getting a little antsy to enter. And then on this wick, which ended up being a divergent bar. So there's tons of buyers in here. So what if it's bearish, what should happen when we get under this swing low? They should probably stop out, right? If they would have gotten stopped out, the price goes lower and we get a bigger volume wave here. Instead, we got something very, very helpful. A green, hunter green absorption bar with trapped sellers, the blue dot. Now, the fact that there's a green dot there tells me that if the very next bar goes higher, I will get a white triangle up. And that's super helpful to know. And it means that there's excess down here. There are basically, it's the same thing as trapped sellers, but it generally produces a little bit of a push once this bar is broken. And so if you see a green dot and the very next bar closes higher, it generally, not always, generally gets enough energy to produce a triangle up. You can see it here too. Green dot, the very next one goes up and it's triangle up. Now, keep in mind, you can get triangles without green dots, and you can get green dots without triangles, right? It's not as simple as when this happens, this always follows. But it sure is helpful to me to see this green candle here coming in on what appears to be a very divergent sell wave that trapped sellers. And I right away, when I immediately at this point know that if the very next bar pushes 20 ticks, 24 ticks higher, we're going to get a triangle. Those triangles don't always produce continuation, but there are a ton of setups that require a triangle. One of those setups is blue dot followed by white triangle up after a broken swing. Well, right at this point, I already know, okay, I've got a green dot and a blue dot. If the next bar has a white triangle on it, I can long for at least a scalp. So once I get this, no matter where I am in the chart, as long as I have room to resistance to get 1-to-1, I know that I can at least take this as a scalp. And so that's very helpful information, right? Knowing that this exact pattern that I normally buy happens to be occurring in a location that should have been bearish. I mean, look how close this voodoo range level is. So there certainly is a way to get into this trade with that information. And it occurs, well, yeah, you get continuation after a little bit of a stutter step, right? And you get up to the resistance. And that's all I'd want. It's just a scalp. Remember, we're not at prime location. We didn't even make it to this voodoo range level, right? This is not prime location. It's a scalp. I can take it only if I'm willing to risk the market coming back to here, which is where the stop goes. And my entry goes here, right? So it's not a small stop. It has to push quite a bit. In this case, it does. It does work. But again, I'm okay missing that trade if I need to limit my losses because the location isn't right. So the chances that occurs every single time is unreasonable, right? But to know that this spot is a good place to take it, but for instance, this spot is not, right? Here's another one. This one. This is a better example. This might not be such a good place because this one had the blue dot in the right spot. So look, here's another one. Broke a swing, green dot, blue dot, followed by white triangle. Normally that's a scalp anywhere on the chart. And it looks to me like we're bouncing off a voodoo range level. So yesterday, before I had this conversation with Simon, I would have immediately thought, absolutely hit it every time, take this trade. But what I realized is, okay, you need to put your stop here and your enter here, which means I need like at least 20 points. So I need to get up here to this resistance, basically. Enough. That's a little bit of a stretch, but that's a little more than 1-to-1. And so if it can get 1-to-1, I should definitely take it. But let's look at if I even have likelihood of getting 1-to-1. So here's the problem. I don't have a divergent sell wave. In fact, this sell wave is not only bigger than this one, but it's also bigger than the last few. Now, technically, 2-bar waves do not count in general. You want to assume that these little pullbacks are just part of this bigger green wave. But Simon's view on this is that you need at least 3 bars to make a real legit wave. So again, the setup on the algo, the actual pattern, is bullish. But unfortunately, even though I'm at a voodoo range level, that voodoo range level is not the prime location that it sometimes is. And because of previous price action, I know that we've already extended, right? This would have been prime location. But once I've already done this, I've already made that sweep, even though I'm trading above it. Remember, I've got this guy up here, 12,768. That's the one I want to be being more active at, not here. Like I should be looking for longs here, and I should actually be looking for shorts here and here. And of course, in my mind, I would normally be thinking, well, this looks bullish, so we're retesting old resistance as new support. That does occur sometimes, but when it doesn't, usually when that happens, you needed it to do something a little different than this with the waves. In this case, if you look at this, whoops, I thought I had it on. So this wave is bigger than the last sell wave, the white one, and it's bigger than this wave. So even if we said that this entire wave here was a down wave, which isn't really reasonable, but let's just to be super conservative, because this one got 2, right? Normally it's, the way to think about it is that it's actually a green wave, and we just ignore these and see how that makes so much more sense, right? So let's do it the right way. So we say here, that wave was this big. We're going to ignore this one. This wave got bigger. That makes sense. We went higher. Okay. Actually, no, I'm sorry. We're looking at sell waves. So that in and of itself is actually very interesting. That's hidden divergence. We have sellers showing up, more volume showing up as we come up and, or as we sell off the top, sorry. As we sold off the top, we got an increase in volume compared to the last time we had a pullback. So this right here is already a little suspicious. But what's really suspicious, if you thought that this was new support, is that this one is bigger not only than the previous one, but than the last 2. So now I shouldn't even be thinking that we're going higher overall. We might go higher for a couple bars, but realistically, we are probably going to retrace this move right here and come back to there, to that orange absorption candle. That's what's going to probably happen. Maybe it won't even go that far, But that's what I should be expecting here when the dominant wave is white or sell. And especially when that dominant wave is bigger than the previous couple of down waves, right? That's like that would not be a great place to long, because until and unless you get above this guy. Of course, the problem with that is then you would run into resistance. So again, you have to put all of these things together. The profile, where you want to do business, whether or not it's bullish or bearish there, what would change your mind about that location, then zoom in, see where we are compared to recent price action, then look for patterns, and only in the direction and locations that you initially planned to do business. So what ends up happening here is it comes up and it looks like, I don't even think it even gets there. Yeah. Oh, wow, look at that. Boom. Does it finally then go through it? Nope. See, it gets stuck. So this should make sense. It was a more significant retracement than I expected, but that's because it did. So it did this one first to clear this guy. These buyers got absorbed by passive sellers. That's what the orange bar tells me. When it comes after a green bar and it's followed by a triangle, there are aggressive sellers hitting this. So when we come back up there, buyers get trapped, right? That should make sense that we see a divergent out there. Now, as we come down, let's just take some of this stuff off. We get to where we were before, I believe. Because now, or in similar situation anyway, we go lower, but we get less volume. So bears are doing great. They are feeling good in here, right? If you are short from even like here or even here, you're feeling pretty good about your trade at this point. Well, now that I'm evaluating this a little bit better, I should be saying, hold on a second. This is probably consolidating at best, because this wave is less volume than this one. So this big move up here put in a ton of volume above the voodoo range level. Then they got into this well-negotiated area, approached VWAP, and found a buyer, like before VWAP? Well, why didn't they sell some more? Well, maybe they will, right? So you got to give it a minute. They don't. In fact, you get a buy signal. Blue candle that's pink. Right? If this was in the right location, especially coming after a star and a green candle, this is really bullish. And so it's interesting because that came after that. It got lower with less volume. So now we can say, well, do we expect a big buy here? Are they a buying frenzy? Is it possible that the next move is a huge buying frenzy? Because that's the other part of the equation that we need to decide. Not only should I be long or short, but if that's a long signal and there's good reason that shorts are going to get trapped here, how likely is it going to go anywhere? Or should this just be a quick scalp? Well, here's a really fun and cool way to figure that out with this. What we're going to do is we're going to look at the current color. So if we're looking bullish, we need a wave that is bigger than the previous two waves of the same color. And we need one in green and in white to happen recently. The reason for that is because you only get big moves when you get a lot of momentum. And to get a lot of momentum, you need to trap traders. And to trap traders, you need volume. So all we have to do, just like when we found how to figure out if this was a divergent wave, right? Just put the line at the top and see if the next one that they make progress, but they don't put in volume. So now we're kind of doing this the opposite way. We're saying, okay, here's our biggest sell wave. Was the wave before it with 3 bars smaller than that? Yes. Was the wave before that, that's 3 bars, smaller than that? Yes. Therefore, this is a dominant sell wave. It's a third wave. And like I said, if this is totally confusing, watch my coaching session with Simon. I posted on Twitter about a couple weeks ago, and it's also on his YouTube, which is Tough Trader. So, yeah, you've got a lot of sellers coming in here, more than we saw recently, right? The last few sell waves were pretty weak. This one, and you know, those were pretty weak. Compared to the last two, this sell wave has a lot more energy. So that's something you need for it to go anywhere. Now what we have to decide is, could it go up? For it to go up, the wave that comes after this, but is the opposite color, which is here, or here, the opposite color wave needs to also be bigger than the last two. Well, this one clearly wasn't. Here's where, so this wave here had this much accumulated volume. We skipped this one because it's only 2 bars. This was the next wave, and it was significantly smaller. So we know for sure that this is not a third or dominant wave, and therefore this long is a scalp and not a huge, like it's going to go to 12,768 often, right? So it's a scalp until we get a dominant green wave compared to the last 2 green waves. But we also have to watch the white waves because they also have to have some volume in them. Here's the next wave. Definitely not dominant, right? We're still trying. Now we can beat this one because that's 2 behind us. The problem here, really, is that this dominant sell wave is located at the top currently. So to get really bullish, you obviously have to get above that. To get above that, we're going to need some energy. Usually to get energy, you need volume. So that's really where this comes from, is that the big breakout would happen if you develop volume above this. But you actually have to get follow through, right? Well, you only expect follow through if you have trapped sellers. Well, where are all the sellers? They're here. What happened when we trapped them? We did pull higher. So we could be developing a buy, but it's not there yet. There's too many buyers back here to think that this is going to go anywhere right away. Okay. All right, so now we have a problem. Oops, I forgot to show you. We have a problem. We have a divergent buy wave. This wave is bigger than this wave. This price got higher than this price. Okay, we can go right back to what we did before, only the other way, right? So now, divergent buy wave, if we have a sell signal and we've had a big wave recently, which we have, dominant green wave. That dominant green wave was bigger than a lot of than most of the other white or gray waves, right? So now if we get a sell signal like this, you could actually short this for a scalp, right? So there's the scalp, and if it wasn't obvious, there's 2 trade setups here. It's the star, or else the triangle up with this blue dot getting beat by a triangle. Those are both decent scalps for at least like 10 to 15 points most often. Okay, so we put in this wave and we look and we say, shoot, that was divergent. No, it was not. It was just a small, it just didn't make it, right? It didn't make it to the lows yet. So this is a pretty weak wave. It's not divergent because it didn't actually take price lower, but it's a pretty weak wave. And we didn't really expect a huge move anyway. We're not at good location. But it doesn't mean it's done. It's just not expecting it to do much. Okay. Now it broke. And we got a dominant wave. Now we're back to where we were before. Right? So we knew that this was a scalp short. And if you held runners, you'd do pretty good. But I'm not necessarily expecting this big move unless I was looking at which side is dominant. And right now that dominant side is the sellers. To get really bearish, we need to find the big wave that the buyers put in, the dominant wave the buyers put in. So we'll say this one here. This one's pretty, actually it is this one because this one only has 2. So it's this. To get really bearish, we have to get under this. And that makes sense. It's under the voodoo range level. So let's do something fun, because I don't want this to take forever. Let's put a marker below that. And what I'm saying is that if we can get under there and develop volume under there, actually extend down there, right? Not just touch it, but get a big wave down there of selling, we can then start looking for support resistance to switch. So we were here, we talked about how that short worked pretty well, and then we get the dominant green wave finally comes in here, right? So this was all bearish. We at least expected this to produce a scalp. It went a little further than expected, which is great. Never a problem with that. This one went further and it was bigger. Nothing wrong with this wave here, not divergent. But the big interesting thing is here, we put in a big bull wave for the first time. And so when this one goes lower and it's divergent, well, we pay attention to this big old wave that came out of nowhere. And compared to the previous green waves, it's definitely dominant. And so that's what makes this such a good buy. This buy can sweep. And it does, right? Like, that's a pretty decent move. How long is it going to go? Well, probably until it puts in a divergent wave and breaks underneath it. So here's a divergent wave. But have we had a third wave seller yet of dominant? No, nobody's selling, right? All the selling happened back here. So where are the trapped sellers? They're just barely getting tested. The potentially trapped sellers are still here, like I mentioned before. That's where these guys are still potentially stuck. That's where all the accumulated volume is. And yeah, they got some buyers pushing on them, but they're really not hurting that bad. So what are we going to get? Well, we'll probably get consolidation. We've got a big buy wave that starts here. Now, if you get under, remember we said before we had to get under this wave to do anything bearish? Guess what? That now changes. We've put in a bigger wave. Now it's developed volume under this guy. Oops, my mistake. Let's just start over with this. So here we go. So here, it's actually not even to the top of that candle. It's here. Okay, that's where we need. These are the guys that need to suffer if we're gonna get bearish. These guys need to be hurting, not just tested below. Look how when we test it below, they absorb. That's normal because we had a divergent wave, right? And look at this huge buy wave. So I hope that makes sense. Because like I said, it took me a while to really get it to sink in. But once I saw it, I was just like, oh my God, like now that I have levels, I already know the setups. I know what it looks like to get long. But the problem is I wasn't identifying the difference between this long and this long. And the difference is not just the location. It's how much accumulated volume there's been compared to previous moves. So again, we go higher, and let's see. Okay, divergent wave, right? Clearly divergent wave here. But what I said was the sellers are back here. So they're not hurting yet. It'll be pretty hard to trap them but we might. Okay, they come back into this previous support. Look, this, let me do it with the line. So now look what's happened. When we look at the sellers, 1, 2, 3, right? The last 3 waves. This one, let's do it like this. This one is clearly bigger than the last 2 sell waves with 3 bars or more, right? And this one is also bigger than the last 2 buy waves. See how we put 2 more little buy waves? 1, 2, with at least 3 bars, and we beat it, right? So even though most of the volume happened back here at support, because we've had some extension and some new volume at the top, all of a sudden, all we have to do to be bearish is get under this guy. So we can move him. Let's take this off because that was just previous resistance that got from the trap traders that became support potentially. So now, let me just delete this. It's easier if I can actually. So this, I'm looking here. This is the bottom of the wave. It's like that. So now these buyers need to get uncomfortable before it can go very low, very much lower. If they're not feeling any pressure, they're going to keep defending it. Once we get under those guys, anything's possible. But like I said, here's the conditions we have now. We've had a third and dominant wave that is bullish. We've also had 1, 2, 3 third dominant wave that is bearish. Now we look at 2 things. We look at location. Where would my target be if I was bearish? And second, we look at which one is the most recent information. So currently, the most recent information is this sell wave here. This one. Most recent compared to this dominant wave here, which is going up, right? So it could be, the reason why recent makes sense is think about this from a market standpoint. If the market, we are on the backside of this move. That's the way to think about it. This was the front side of the move. And if it was continuing to be the front side, what would we get? Consolidation, decreased volume, breakout, right? That's just normal market theory. Instead, what we had was double top, close below, pull back into old resistance, try to make new support, right? If all you saw was this. But what I said there is that even though that setup here worked really well, I don't know if I did say this or not, but see how this same setup, green bar, where's my thing? Green bar followed by white triangle is usually a pretty strong setup. It worked here too. Green bar, white triangle. When it shows up here, I'm not so thrilled about it. And that's because my most recent dominant third wave is bearish, which means there's probably some trapped buyers up here. Trapped buyers make it really hard for even the very best setups to extend. And again, theoretically, we should all understand this, but how to apply it is what has gotten me so mixed up. And so then I look at this and I say, well, wait a minute. Do I even want to be a buyer here? Sure, this might be old support. But look what happened the last time we broke over this, what I thought was a pretty important voodoo range level. We tried to make it support and we double topped and fell off of it. So we're also testing new resistance. It's not a buy, you guys. It's not. And like I said, I need to train myself a little better to see it, because for so long, I've just been trying to train so hard on these patterns, which are really important, right? And you just can't take them everywhere. But think about how much harder this is if you're using the footprint of the DOM, right? Let's say you're looking at the DOM and that's the way you trade, and you know that I need a big order, I need someone to trade into that order, and I need it to hold, and then I need at least 2/3 of the volume to hit 2 ticks up or whatever your criteria is. I'm sorry, but having all those rules and not having some kind of symbol like a triangle come up and then still having to determine, do I even want to take it if it sets up absolutely perfectly? Am I even interested in longing here? Is this the right time to long, or was this the right time to long? Because this is an okay location if we didn't know that this was resistance. But it's not the right time because it's on the back side of this big volume move. So like I said, the symbols certainly make things easier. And that's why I'm using the algo and not the footprint in the DOM and having 100 screens to try to figure out what's going on. This is doing all that for me. It's watching the DOM. It's watching this. I've got the algo interpreting all of this information so that I don't have to sit here and think like, is that bullish, bearish? Like, oh, whoopsies. So let's see if I can get that back. Come on back. There we go. So I guess it's a little, yeah, here we go. All right. So hopefully that makes sense. Okay. Let's see. All right, there we go. Sorry, technical difficulties for a second here. We got it. So now, yeah, at this point, where were we? I think I went a little too far ahead. So at this point here, I'm not necessarily looking for a long. Now, in this case, it does go back to test this resistance. So usually these will still work as scalps, right? That's what I said at the very beginning. There's nothing wrong with taking the trade as long as you know that you're okay with a small result. Personally, the situation I'm in right now, I don't want to risk it on those trades. I'll just wait. Now, the cool thing is that this now becomes a pretty decent short because we've had a dominant third wave. Whoa. Dominant third wave here, bigger than the last 2 white waves. We've had a dominant green wave, bigger than the last 2 green waves, but we're now on the back side of that. So as long as we don't get above whatever candle started this dominant wave, which is the top, as long as we don't get above this, any setup in here has the potential to be pretty wicked good going to the downside. And that one works just fine. So yes, I miss this with my 2 micros, right? Because I can't handle like so many stops with the 2 micros. If this only goes 10 points, it's just not good enough for me. I miss this one because of the fact that the timing is not right. But this I do. I get that, right? It's still not bullish, right? So now we can ask ourselves, is it bullish now? Well, do we have a dominant wave? Let's see. Here's 1, 2, 3. This is the last sell wave. It's clearly bigger than this one. Is it bigger than this one? No. So this is a divergent wave. Divergent waves mean we don't get aggressive. So now my shorts are pretty much finished. The hard part for me is I was getting so stuck on I want to hit the voodoo range level because it usually does, that I wasn't paying attention to the fact that they ran out of steam and they had every intention of hitting it, but there were buyers lined up. I mean, for God's sakes, it absorbed on low volume. Sorry, I was trying to... So look at this. I mean, even just seeing this candle, if you're short, for me, seeing this symbol needs to be a huge, huge, huge red flag. Absorbing green on the inside and pink, meaning like it's rising even though nobody's really hitting the, like people are just pulling their orders. So the market orders are getting put in and they're getting slippage. People are exiting so fast. Like, why should I be short there? If they're absorbing all of they're absorbing all those sellers who were so strong, right? Look at all this volume. It looks like a lot. The thing is that doesn't actually matter. What matters is is it increasing in strength since the last wave down? And maybe even the last 2 waves down. Why the last 2 waves down? Because things usually move in, up, down, down, down. Like they tend to kind of go in little 3-wave bursts. I'm not an Elliott wave fan. I'm not going to say do 5 for the dominant and 3 for the. I mean, you can if you want. Feel free, but I'm not gonna care about that, right? I'm not a huge proponent of Elliott wave. Those kind of waves, I'm not a huge fan of measuring and all that. But what I do know is that when I have sellers hitting it hard at the highs and then backing off as we go lower, and then when they try to push even further, if they can't accumulate as much volume before they run into buyers and they stop extending, if they can't put in as much volume as they did initially, guess what? We're not going lower right away. We might go lower, but we're going to have to back it up a little bit to collect some energy, right? So that's how you get that move. But like I said, it's just a divergent trade, so it's only a scalp. We're not expecting this move to take out this high. It just doesn't work like that very often unless you're trending. We're clearly not at this point. Now, it continues, and I do believe now it goes higher when it puts in this. So what happens here is they're able to push this off the low with super light volume. See that? And so they're anticipating the fact that all they're going to need to do is sustain this level of buying to keep it going. I guarantee you any algo watching volume knows that if we can push all the way back up here on this little volume compared to what it took to do this, yeah, I'll buy the dip, right? Especially after this one was actually divergent compared to the biggest. So yeah, now we go higher, and that makes sense. And yeah, we can just continue doing that. So from anybody watching, does anyone have any questions? Otherwise, I'm going to show you what happens when we hit these important levels we talked about. So let's just follow price a little bit, and we can see that we finally took out this. We do, I believe, take out this big volume here. And when does it happen? Well, probably when we took out the lows from the biggest buy volume. Where was the biggest buy volume? I said the biggest one was here. How did this get erased? So, whoops, that was my mistake. So once we have taken this out and we put in volume below it, and especially when we retest it like this, this is an incredible short. Anywhere up here. You just need a signal. This isn't actually a signal. I don't have a sell, but if we get a signal like a star up here going down like that, yeah, that's good. Is it going to stop it once and then do it again? Probably. So that stops, and that should be good enough. Nope. Triangle down. That's a good setup right there. This one. So exactly which one works, you're not going to know, right? But eventually, I mean, if you wanted, you could wait till if you get like a triangle underneath it, that would be clear that you're going down to 12,612. But this is still really, it's a high volume area, right? You're going to get a lot of chop in here. It's not going to be precise, which is why I'm not expecting big moves to usually come out of this. But if you want to know where they might happen, it's gonna be right here. So like here, I'll show you what I mean. So we're at 311. So now, so we're looking at this, and what I'm saying is, as long as you're inside of this area here, right, where all the volume was. Oh, I got rid of it, I guess. I got rid of the, but all the volume is in here. I think everyone can agree with that. So when you enter a trade, like anywhere in here, it's going to be choppy. When does it stop being choppy? When you get out of that area, right? And what I was saying is that I'd like it, ideally, I'd like to get out of that area, come back and test it, and then short. So if I was being nice and conservative, rather than taking every one of these orange, like I could take this one, dot, triangle, and then put my stop up here. That's a really good trade. Otherwise, dot, orange bar, triangle. This one's totally acceptable. There's plenty of ways to get it in the middle. It's just that some of them are going to stop. But eventually, one will work. Okay, there's our first red triangle under the trapped sellers. It's also an arrow down. Very, very strong if you have momentum established. Notice here, this arrow does not work very well. You just get this tiny little move and it immediately comes back on it. I thought it was good, right? But the problem was we didn't fully negotiate this, and I could have noticed this by seeing what volume is doing. Look, all this volume coming in here, and they get this, right? Like that's puny. It's nothing. It's consolidation. So we needed to at least put in some more volume, like this. See how this volume is bigger than this one and bigger than this one? We've had some decent volume put in above where we're getting involved. Now the arrow should work. There we go. I personally think that's pretty fucking cool. And like I said, it's a lot of steps. Well, once you get good at it, you start to see like that where the opportunities are. Now look, you could keep doing this, right? Now you have a dominant buy wave. And so yeah, like you could just keep going here. Yep. It's about now it bounces off of this level. So let's see if we can get up here to here, right? Let's see if we can get it to extend. Okay. Okay. Now it's gotten to, again, what I'm looking at here on the, now we've extended it to that green level. Oops, sorry. We've extended to this. And what I said at the beginning of the stream, if you missed it, was that this area here, whoops, my voodoo range got turned off. It's been crashing lately. You just got to do this. When you get to these extremes, the likelihood that we're going to get some kind of a exhaustion point is so much higher up here than it is here. But having the voodoo range level there really helps me. Not because I'm going to short the moment it gets there, right? I'm not just going to, just because I get like a star that happened above the voodoo range level, I'm not shorting that. I want to make that perfectly clear. It's just the location to watch. And if you look at what we're doing here, it happened right at the open. I mean, look, you guys, like, it's all buyers. Like, don't fucking short that. Right? It's just buyers. Like, you need to get a significant sell wave to have any effect on these guys. Again, when is it going to start to be bearish? When you can get below this. Okay, so let me just take all this off. Okay, so when you can get below this guy, where this big wave started, 12,690, you have a potential of rolling down. Now that can move up if we put in another bigger wave, but let's see. Hopefully we get a divergent wave and a big sell wave, right? So here I'm only looking for longs. So even though this, this setup looks like it's like right at the top, red triangle down, star up, that's with a green bar, that's a strong buy signal when it occurs at support. I haven't been taking these up here because I thought, well, we're not at support. But look, we're not going to go back to support, you guys, when you got this much volume. There's no way they're going to let this come back here right away. It's just not going to happen. So if you want to try an aggressive trade, that's an okay place to do it. And what's cool is now that we've got all this volume, we can actually like mark this off. And if we get back in there, we can probably buy it again. As long as we haven't switched to sell bias. I'll let you know if that happens. So you do, and again, this is for a scalp, right? We're just scalping this. Not a big, we don't want to be a buyer up here and expect it to go that much higher. But it makes sense to be a buyer up here if you just want 15 points. That should make a lot of sense. Now, when it does come back, it does not give us any sign of aggression. Okay, good to know. We don't have to worry about buying. And then, what happened up there? We wouldn't be a buyer anyway if we were paying attention to the waves. We went higher and made a divergent up wave. That is a problem for buyers. We have all of these buyers involved expecting higher prices. They get higher prices and they do nothing with it. They just hang out here and nobody's buying it. What does that tell us? It tells us price is not fair. We are way above what fair value is right now, and we need to go back and re-auction some of this. It doesn't mean it's immediately bearish, but if you want to take a quick scalp and it sets up, I don't hate selling as long as you know that you might not cross this level. This level might hold on the way back. So now we're looking for a down, before we can really get short, when I say get short, I mean like with my 2 contracts that I need like 20, 30 plus points to really take anything out of it. I need a dominant third wave sell. So this is 1 sell wave. This is 2 sell waves, right? My third sell wave needs to be bigger than this one. That occurs here. Now it's fascinating to me that that also occurs as we break under the voodoo range level. Kind of cool. I'm not just immediately selling the voodoo range level. I need a sign of aggression to occur there. So I'm not short yet. Still not short. I'd prefer that it comes back up here and tries, right? And just puts in another divergent wave. That is a sell signal, but it didn't really retrace much. This is the same thing that we saw overnight, right? Old resistance, old support, whatever. And then is it going to turn here? Like, we didn't really bounce off of this much. We just went right through it. So they're hoping to make it like, I don't know what that's called, but like that little curvy, get under it, come back, it becomes resistance, it falls down. So is this likely going to produce a huge move to the downside? I mean, it could, but probably not with this big buyer wave here. So where do we expect it to go? Well, I would say let's take a look and see when this buying really got going. So we come down here and we make well, of course, the buying got going at the open. That's not a surprise. Well, the open happened right here. These were sellers here in that wick. So the buyers showed up there. So that's about what I expect from a scalp at this point. If it goes farther than that, great. For it to go further, it needs to really work through this. And it would be really hard to pass through this in one try. But it does happen. Usually what happens is they try, they fail, they try again, they put in a second slightly higher high and then rip it down, right? So they try, you get a scalp. That's beautiful, right? That's enough. If I'm trading full size, that's fine. Comes back up. We're keeping our eye on the waves now, making sure we're not putting in dominant buy waves. This was the short. I'd just cover it there as soon as you come back up above here and show some aggression. I don't see a great reason to buy it unless you were just scalping. Maybe I'm wrong, actually. No, there's not a reason to buy it yet. So, so now we're seeing that it's coming up to this resistance here, and it's finding sellers. This is a great sell, right? The location is perfect. I can put my stop up here. We are above this line in the sand that I said we need to really get going lower before we can have a really big push. But how do you usually get through big levels? You go a little bit higher, you catch some late longs, and you trap them, right? Well, let's take a look and make sure we're not trading into heavy volume, because that would be bad. We don't want to take on a dominant wave. Well, here's a buy wave. That's the current buy wave here that started with that star. That buy wave started here. Oops. How did it work? It went underneath this little support, found, trapped some sellers, and then went, right? So it's a scalp. It's fine to take it, but I don't expect it to go any higher than this.
because we didn't have a dominant wave. The dominant wave was back here. So in this case, our accumulated volume waves, we look here, that's 1, 2, 3. So all we need to do, oops, let's get above this, which we do. Yes, we break it. So this wave up had more volume than this wave, and it had more volume than this wave. That's great news for buyers. That gives us a chance, basically, if you're a buyer, to take out that high. But you need a buy signal. You can't just buy it. So currently, the ones in charge, though, are sellers. See how this wave is clearly bigger than the dominant buy wave? Clearly. But the buyers are the most recent. So, but that you've got a little bit of confusing competing data here. And in my experience, that generally means you're going to chop first before making a decision. It doesn't mean I can't short this. It just means that if it comes down here and doesn't get through support, which right now is the beginning of this dominant wave here, right? If you can't get through that on the next push down, it's a buy because of this dominant wave here. But right now, it's a sell because of location. Hopefully that makes sense. I'm expecting it to at least come back and test to make sure that there's still buyers here. And if it happens to go through it, great. Hold runners. If it happens to switch, I can actually flip to full-size long. So there it is. It does flip. And so now let's take a look here. We've got dominant buyers. Do we have dominant sellers? Because that would be a problem. We did not get established volume underneath here. Again, one of these is going to stop. So realize this doesn't always work. So now I'm looking for 3 sell waves. 1, 2, 3. So what we find is that this sell wave here, this sell wave here, this one, was, did it go farther than this one? It basically went to the same place, and it had less volume, right? This volume was much bigger than this one. So generally, it's going to be really hard to push lower right away. So if I had scalped this, I'm out here. And instead, I'd be looking long. Okay, now, interestingly, we got above it. We got a little bit of a push, but this is now telling me something's dreadfully wrong here. Because we put in a buy wave, and look how small it is. No one's buying it, right? That dominant wave started here. This should be taking off. So if I get stopped out here, we have a serious problem. Buyers have a serious problem, right? Because this next move could be gigantic. So let's see. Thankfully, it's okay. It doesn't get stopped. Cool, right? So we said buyers technically had the lead here. You had to wait for it to set up. It tried to pull back. It didn't stop out, which would have been underneath the star. And it bounced. Interestingly, it gave you another buy signal right here. But now we have less volume. So even if we push above this high, unless we break this, the next scalp is to the low side, to the downside. Hopefully this is starting to make sense. If there's anybody who's been in here the whole time, can you give me some feedback on whether or not any of this is making sense? I know it's a lot to look at with all the symbols and stuff, but like just the things that I'm explaining with like following the waves and seeing who's in control. If you can just trust me that this is an established buy signal and that this is an established sell signal, with the if you can pass all that up, hopefully the decision of whether or not it's a very lucrative big opportunity or it's a opportunity for a small scalp is starting to be clear. So if that's not clear, tell me where you're getting lost Like I said, I don't expect anybody to follow any of the patterns in the algo. Unless you're in the room, then you just might know it. So yeah, so we get a nice little push here. Look what happens, you guys. Look what happens. We push above this and get a sell signal. That's a problem, right? Let's see who's in charge. Who's got the dominant waves? Well, sellers did not get a third dominant wave on this push down. That was not a very strong push. Buyers had their strong push back here. We've now gone slightly above it and given us less volume. So unfortunately for buyers, this is now a divergent wave. So what we would expect is a scalp to the downside. Cool, Speed, I'm glad. Okay, so that was the scalp to the downside. Now your stop technically would be exactly above this candle here. So let's put this here. Like I said, these are not all going to work. Eventually one of them is going to stop because every system you use eventually has stops. Since it was just a scalp, it wouldn't be unreasonable to just take profits here because this is technically a long signal, but the location is awful. Just awful, right? We just did a double top and now it's saying this is new support, let's go. Like, where exactly are we going? And how are we going to do so with such little volume? So in the past, I've been, like I said, seeing the pattern, blue dot or star, triangle up. You know, that's just been a buy pretty much anywhere. And I've been doing okay. But all of a sudden, I can now filter out and say, hey, look, this might work for 10 points. The chances it's going to go for 70 are like next to zero. And so why even mess with it, right? So we'll see what it does. It does go a little higher. That's all I would have needed it to do. But the short does stop out, right? If we would have shorted this signal here, it does finally give us a stop. And so generally what that makes me have to do is take a step back, make sure I'm not missing something really obvious, right? What I think this actually was today was this was econ. If you look, this is 9:55 Eastern. So I think what they were doing is they were running it up, taking out all the stops before they put out econ. That's really normal. And I personally don't even trade a couple minutes before or after econ unless I have ideal locations getting hit on this stop run. So like, for instance, if this was a voodoo range here and we get above it and fall down, I might actually short this into econ. But in this case, my voodoo range level is down here. Wait, is there another? Did I miss one? Hold on. No, 846. So what would have had to happen for me to get short is 846 would have had to get tested. Whoops. Would have had to get tested and rejected. Then I absolutely can take that. But in this case, I'm not just going to come back at it unless I have reason to think that sellers are ready to pounce. And what would that look like? It would mean that the current sell wave had bigger volume than the last two. Well, the current sell wave with 3 bars is here. 3 or more bars, I should say, is here. That is definitely not the, what's it called? The dominant wave. Definitely not. So I'm not looking for a sell here. Yeah, because of a location, it makes sense to me that it might go lower. But I would normally not be taking that, even though if this is a red triangle, oh, it's not. Okay, so it doesn't even set up. But that's good to know. So let's just see what happens here. Okay, so it doesn't set up how I wanted it to. Instead, it spikes and then sets up. So this is technically a short, just not based on this criteria. It's a short setup, but I have no reason to think that sellers are in control here, except for the location. So I personally miss this short with this method, which I'm fine with. Not a problem. right? That's okay. To not get every single move, I have to be okay with that if I'm going to want to not take as many stops. I need to be okay with missing some of these, right? So, okay, so now if we get a triangle, we have this wave being more than 3 bars and putting in this much selling, or this much buying, sorry. This wave putting in this much, which is less, slightly divergent. They tried to go lower, and then they went higher on more volume. All of a sudden, at this point, we should be starting to look for an opportunity to buy, even though we're all the way up here, because now we have dominance with buyers. Buyers are putting in more volume than sellers are at the moment. So if this follows through with a white triangle, it's probably a buy. So that one is technically a buy here, unless we've had a dominant sell wave. Let's check, because the most recent's what matters. So that's not a 3-point wave. That's not a 3-point wave. We would have to get above a 3-bar wave. Would have to get above this to really think that this is just going to roll over. At the moment, it looks like it's probably going to consolidate, but it's technically a buy there. That gets a little bit of something. I don't know if that continues. I actually don't know what happens here. We don't really have anything going on there. It's not much of a signal, but star up, star down could be a short, but I don't see sellers being in control here. And they actually take it out. So again, econ can be kind of a funny thing. Sometimes you get moves that you just don't expect. But location-wise, it makes sense, right? They tried to push it in. Oh shit, did we have a divergent wave? I might have missed a scalp. Ha, I missed a scalp. See, this process is still new to me. So this one was a problem because this green bar, this green wave, is smaller than this green wave and this one. Yet, we're continuing higher. See that? So like it's all the same. Like they're basically at the same level. But to get through resistance, to get above this resistance, we need to have building volume like this. See this one? That's a nice looking volume. So it's okay in my book to buy this, and I might get a scalp. But when it stops out, I need to look at this and immediately think, whoa, we are not going any higher. We need to start looking for the opportunity to short, right? If I was quick, I could reverse as soon as I got stopped and scalp to the downside. But generally what I would do is wait for it to stabilize, come back, set up again short, and then take it. So let's just see if I would have gotten that opportunity. That's the problem with the short side sometimes, is it just rolls over, right? Technically you did get another opportunity here, the red triangle, but at that point here, did you have a dominant wave? That's what I would have needed now. So let's take a look here. This one had 3 bars. This one had 2 bars. This one had 2 bars. You would have had to get above this, and I didn't quite do it. Of course, it wasn't done, right? So once it's done this, now I want to start looking for shorts. And again, yes, I might have missed this move. And that's just going to happen sometimes. On another time frame, it might have set up better. But on this time frame, this move is something that I would just have to accept missing or be really aggressive with based on location. If this triangle would have occurred right as they crossed the voodoo range, I might have made an exception. But I missed this and was frustrated about it. But now that I see it, I see why I did, and I'm okay with it. I was just following my new rules. So at the time, it was frustrating. But yeah, when this guy gets blown out with the triangle, and it also takes out the voodoo range, I can probably take a scalp here, but it's probably too late to actually get the big move. The big move set up here, and it just didn't trigger me because there wasn't enough selling up here. It just kind of consolidated up here, and they pulled the rug on econ, right? I forget what number it was, but PMI, something like that. Econ came out, everyone just sold it, and that's just going to happen sometimes. You either have to be a really aggressive trader and take all those aggressive trades, or you have to be conservative and have a reason, a criteria like this for when you can be aggressive. My criteria said that even though unless this was higher, was this technical? Let me see. If this was, it might have been one tick higher, in which case I just missed it. Wow, it was one tick higher. So, yeah. So technically I could have taken it had I been paying attention to the fact that I thought it just I just didn't notice the divergent wave there. That's too bad. So I just got to be a little bit more aware. This didn't look that divergent, but I wasn't. So what I'm trying to say, I'm having trouble ignoring the 2-bar waves. So when the divergent wave comes in, what I need to compare it to is this one. And like I said, this is just a matter of getting used to the system. You have to give it some time to switch. And right now they switch when a triangle prints. If you look, every time you have a triangle, it changes direction. See that? If you get a triangle, it's changed direction. Right? So we had to pick something, some line. You have, if you're going to use an algo, a computer program, you need to give it instructions. So we couldn't just, it's got to have some criteria, and sometimes that criteria is going to filter out totally reasonably good trades. And so in this case, it's going to occasionally print these gray bars, even though it's not a legit wave, because it didn't get 3 bars in it. So the rules are you must have 3 bars for it to even be considered. Otherwise, we just assume that those 2 bars are part of a very large wave here, right? So these 2 bars are just basically consolidation within a very, very large bull move here. And so what we need to pay attention to is this one, right? And so when they come up here and they've got nothing on the buy side here, sorry, on the buy. So yeah, when the buy side, I guess I'm not explaining this right. When the buy side is divergent at the top, right? That is a problem. That's where I should have not recognized right away that this is a short. But what I realized just now is that technically, I guess it's just consolidation. So if this would have gone lower than this, it's divergent. So I'm sorry, I made no sense there. Probably lost you guys. My mistake. All right. So, but yeah, hopefully this is helpful. That's what I wanted to show you. Just kind of a neat idea. Another way to plan trades. But I'll keep you updated